Good morning, it's Monday the 27th of September and welcome to Atlantic Capital Markets roundup of the coming week's economic highlights to keep an eye out for. As always, we'll give you a quick summary of the macro data points from around the world to expect over the week, and we'll then dig more into detail on some of the bigger stories straight afterwards. So, stay tuned. So, let's take a look at the economic numbers being issued this week. And starting today, we have the US durable goods data. On Tuesday, the German GfK consumer confidence numbers, the CB consumer confidence numbers, and on Wednesday, the Eurozone consumer sentiment, the US pending home sales, EIA crude oil stock change. And on Thursday, the UK GDP Q2 final figures, and we'll talk more about those in details in a moment. The German CPI numbers, the US jobless claims, and the US GDP Q2 final numbers as well, which again we'll talk more about shortly. And finally on Friday, the German retail sales numbers, the Eurozone manufacturing PMI final numbers, which we'll take a look at in more detail in a moment, and the Eurozone CPI figures, which we'll also talk more about shortly. And over in the US, the personal consumption expenditure figures, the US Michigan sentiment, and finally, the ISM manufacturing PMI numbers. And the companies that we'll hear updates from this week are: on Monday, United Utilities; on Tuesday, Smith Group, Ferguson, AG Bar, Pennon, and over in the US, MICRON Technology, and we'll take a look at these more closely in a moment. And on Wednesday, we'll hear from Next, who we're also going to talk about shortly. And on Thursday, Boohoo, and again we'll talk more about Boohoo in a moment. Go Ahead, Renishaw, Bed Bath & Beyond over in the US. And finally on Friday, we'll hear from JD Weatherspoons, who again we'll talk more about in detail in a moment. So whilst central banks dominated last week, volatility is expected to remain elevated this week, with macro themes driving sentiment. The results from the German elections, the US debt ceiling drama, and the US infrastructure spending bill will also be in focus. Developments surrounding the debt-ridden Chinese real estate firm Evergrande will also drive sentiment. After fear of contagion rose again on Friday. And finally, the energy crisis in Europe, along with the supply chain disruptions in the UK, could also keep the lid on any gains. So, let's take a look at some of those key stories in detail. So on Tuesday, we'll be hearing from the semiconductor maker MICRON Technology, who's due to report earnings after the market close. Now, earnings come amid the ongoing global semiconductor chip shortage. CEO Sanjay Mehrotra said in March that chip demand will remain strong and supply tight into next year. The stock has underperformed this year, falling over the past few months due to concerns over the memory market's health and on Wall Street downgrades. That said, the stock is up 5% over the past month, suggesting investment sentiment could be changing. Expectations are for earnings per share of $2.33 in profit per share on $8.23 billion in revenue in the fourth quarter. On Wednesday, we'll be hearing from Next. Now, back in July, Next reported an 18.6% growth in sales and upped its full-year profit guidance by a tidy £30 million to £750 million. And this comes after Q2 sales beat sales growth in the first quarter thanks to pent-up demand and good weather conditions. However, more recently, sales growth could be slowing, which raises the question as to whether management acted prematurely to raise profit guidance. We already know that sales growth this period stands at 7.8%. The fact that the Next share price has been relatively range-bound suggests that investors also have their doubts. Staff costs are likely to be a key focus, given the labour market issues emerging in the UK. Thursday this week sees Boohoo reporting. Now, sentiment towards Boohoo has been largely overshadowed by concerns surrounding its supply chain and poor working conditions. Exploitation of workers and below minimum wage payments at suppliers led to the company overhauling its processes. This included reducing the number of suppliers down from 200 to 78. Management appears to have managed to draw a line under at least some of these supply chain management issues. Separately, expectations are high for Boohoo. The online retailer posted 32% increase in Q1 revenue in June. Investors are expecting a lot. The full-year sales growth forecast is 25%, which could be considered cautious by some. The share price has been trending lower since February, suggesting that investors are also cautious regarding the outlook. Thursday is also an important day for macro numbers here in the UK when we hear the GDP Q2 final numbers. Now, the UK economic rebound gained traction in the second quarter. The UK economy recorded a better than forecast contraction of -1.6% in the first 3 months of the year versus -4.8% initially expected. The second quarter recorded a 4.8% rebound quarter on quarter. On an annualised basis, this was growth of 22.2%. However, it is important to remember that this was following a -19.8% contraction in Q2 of 2020. The rebound in economic growth stemmed mainly from a strong uptick in personal consumption. Growth is expected to slow in Q3. However, there could still be an upward revision in Q2 first. Keeping all this in mind, do keep an eye on the GB pound and, of course, the FTSE. We'll also be hearing on Thursday GDP figures released over in the US. Now, the US economy has seen a solid rebound from last year's contraction of -31.4%, with 4 consecutive quarters of strong growth. And this was slower than forecast in Q2, with 6.5% compared to 8.5% forecast back in April. Whilst this received a modest upgrade to 6.6%, it appears unlikely to push much beyond 6.7%. That's in the final revision. Whilst personal consumption has been a key driver, supply chain disruptions and staff shortages have played a key role as well. The outlook for the coming quarter is for growth to slow further, with the likes of Morgan Stanley and Goldman Sachs downgrading Q3 GDP forecasts, so do keep an eye on the US dollar and US indices. And just a reminder that we have a really powerful app that is free for you to download and use. Now, the Atlantic app gives you all sorts of useful functionality for the investor, including live trade alerts, live position management, support or resistance trade alerts, trend identifiers, as well as our guidance for the week ahead. It also includes the latest dividends news and the latest financial news as it happens. So why not, after the video, dial into your app store and download the Atlantic Capital Markets app? It's a really powerful tool. So anyway, back to business. And on Friday, JD Weatherspoons is due to report full year results to July. Now, expectations are for turnover to come in around £799 million and a loss of £129 million. However, all eyes will be on comments surrounding the pace of the recovery. Now, rivals have pointed to sales at 90% of pre-pandemic levels, so expectations are running high that Weatherspoons will also have seen a return to these sorts of levels. Supply chain issues will also be under the spotlight, following, of course, recent headlines that some Weatherspoons pubs temporarily ran out of Carling and Coors beer due to the UK lorry driver shortage and industrial action at suppliers. Staff shortages and rising distribution and energy costs could see cost pressures rise and see the infamously low prices push higher. And also on Friday, the Eurozone will be releasing its latest CPI figures. Calls within the ECB to taper bond purchases and call time on the PEP have been growing louder recently owing to the sharp tick higher in inflation in the bloc. August CPI rose to 3.3%, a decade high, up from 2.2% in July. This is still short of inflation levels seen in both the US and before in the Eurozone. Should there be another tick higher in inflation in September, calls to slow down PEP will certainly grow louder. ECB President Christine Lagarde nodded towards slowing the pace of PEP for the next 3 months at the most recent ECB meeting. And this does open the door to further discussions in December. However, she also made clear that the outlook for the PEP was fluid and could move in either direction still. CPI is expected to reach 3.3%, although core CPI is expected to remain sub 2% at 1.8%. We'll also hear about the Eurozone's manufacturing PMI figures. Now, recent numbers have revealed a slowing in growth, with signs of weakness heading towards the end of the year. Rising energy prices are prompting production slowdowns. Global supply chain disruptions have added to those headwinds for the sector. German IFO business sentiment has been deteriorating over recent months, falling to a 3-month low in August, which doesn't bode well for the outlook. Whilst the manufacturing PMI has remained very resilient over 60, this could be expected to soften going forward. Expectations are for the German manufacturing PMI to slip to 58.5 in September, down from 62.6 in August. So with that in mind, keep an eye, of course, on the euro and the DAX. So to wrap up, let's take a look at the dividends for this week. In the FTSE 100, we'll be hearing from British American Tobacco, Smith & Nephew, Rightmove and Barrett Development. In the FTSE 250, we'll hear from JTC, RIT Capital Partners, Games Workshop and TP ICAP. So that's what's to look out for this coming week. Don't forget to look out for our rundown every Friday morning, where we take a look at what's happened in the markets over the week with our own thoughts and analysis. Also, don't forget to check out that app, which you can download from the App Store to your mobile phone, which gives you a whole host of useful functionality, including the latest financial news as well as monitoring your open positions. So until Friday, from all of us here at Atlantic Capital Markets, have yourself a great week.